Hey Gary, Terry Dyer here, giving you a call from Hanson Loans and the Debbie Nelson team. We wanted to reach out to you and say congratulations on your new listing. And just an FYI, if you'd like to have one more arrow in your quiver about how you might better sell that home, I'd like to explain to you real quickly how the 2-for-1 buy down might be the program that would help you do that. Real quickly, not to waste your time or mine, Gary, I'm going to UWM with this product. Most of our loans go there. They have great pricing. I'm going to price this as a 2-for-1 buy down, a conventional loan. I'm going to use a $796 loan amount. That assumes a full price offer of $995 and a 20% down payment. Keep in mind, we can do this with 8% down payment, 7, 5, whatever the typical down payments would be. Obviously, 5, 10, 15, and so forth. But also, we can do these with 2-for-1. We can do it with a FHA loan, we can do it with a VA loan. Where we cannot do these 2-for-1 buy down loans are with jumbo loans or anything outside either conventional, FHA, or VA. It's really quite that simple. Okay, so I'm going to assume that your buyer has a 780 credit score, and it really doesn't matter what their income is, as long as they qualify and don't have higher than typically a 50% debt ratio. We can do this loan without too many problems. Okay, so I've already gone and priced the loan. And what we're going to do down here is here are the pricing options. And if you come down this list, let me slow down on the scrolling, it probably gives you a headache. If you come down these lists, here are the rates that a borrower might want. Now the lowest rate, it seems, today with UWM under the scenario I've already read to you, and it's outlined again here, I think. The lowest rate is 4 3/4. 4 3/4, and that is going to give them a buy down of about $70,000. So it's ridiculous. I get it, but for point of fact, you can see that 4 3/4 is technically on the rate sheet, but nobody's ever going to get that. And also 8 1/8 is on the rate sheet. And in this case, the borrower would be getting about $13,000 credit for their closing cost. So in between all the costs and all the credit is what we have par pricing, where the borrower is not getting any money back and there's no cost for the loan. There's no lender fees. There's no nothing. The lender pays us. We can't do what's called borrower paid, but we always typically do lender paid so the borrower doesn't see any fees. So the rate today, with the borrower not paying any fees and the lender not collecting any, would be 6.883. That's on a 30-year fixed rate loan. Okay, so what I did was I came over here to our buy down calculator, Gary, and I put in the terms that we discussed: $995 purchase price, 20% down gives us a $796 loan amount. The rate, 30-year term, 12 payments per year, and the principal and interest payment would be $52.33.41. So that's every month. Now that can be a number for people might have a difficult time choking down. Excuse the expression, right? It's $60,000, a little over. It's like what is that? $70,000 a year, and that's after tax money. So it's a lot of money. And so a guy or girl, whatever, has to make about $8,000 a month to get that. So it's a lot of money. Now, looking at today's economic world situation, condition, we have a lot of inflation. That's why we have this rate of 6.883. However, the talking heads on CNBC and CNN and Fox Business and so forth are all thinking that inflation is probably going to come down. And when it does, this rate is probably going to come down too. So hopefully it doesn't come down via a big recession or something like that, but it just comes down the rate, that is, because inflation moderates. My point, Gary, here is that at some point in the next 2 years, this client's going to refinance, right? They're not going to have this loan for 30 years. Who does? So, except for the people that got 2 1/4, right? So, a couple of years, this person's going to refinance. So, why don't we see if we can get some relief for that first couple of years? Now, that relief would come in the form of a 2-for-1 buy down, and that would require some participation from the seller. The buyer cannot pay for a 2-for-1 buy down. Even if the buyer took a higher than market rate, remember the market rate, or par pricing as we call it, 6.883, even on a 2-for-1 buy down, the borrower still has an option to get a higher rate, and with that, a little bit of a rebate. So they could go technically or theoretically 7 1/8 and get $4,100 back. And these same numbers, or the numbers would apply, the same math formula would apply. And what that formula is, if today's rate is 6.883, and this is a 2-for-1 buy down, so we're going to go back 2 years. Okay? We're going to go back 2 years, and I don't mean historically 2 years. I mean for the first 2 years of the loan, the borrower is going to pay 4.883 in the first year and 5.883 in the second year. And that's the 2-for-1 buy down. So we also have a 1-for-1 buy down here. In the 2-for-1 buy down, we're buying down 2 years of his payments, essentially. So the seller is buying down the borrower's payments. The note rate payment, $52.33.41, is right there. The buy down payment is $42.16.36. Okay? So this is how it's calculated. The lender is still collecting a payment based on a 6.883 rate, right? The borrower is not making that payment. That money is coming from the seller. The seller is going to be making up that difference. The seller is going to be paying $1,000 a month, essentially, $1,017.05, each month for 12 months. So for the first year, the seller will need to make a concession of $12,204.60. And that will enable the borrower to have a payment of about $1,000 less, $4,200 a month. A meaningful difference, right? Of course, this is a meaningful contribution as well on the seller's side. I get that, but this is how the 2-for-1 buy down works. And today's environment, it might work for helping to get your house sold quicker than another one on the market. So anyway, in year 2, the rate's going to go up a percent to 5.883, and the note rate payment is obviously going to stay the same because the note rate stays the same. The rate on the note is 6.883. Okay, so the buy down payment now is, because the rate has gone up a point, the buy down payment has gone up $47.12.71. The monthly savings to the borrower is about half at $520.70 times 12 payments, and the seller contribution is $62.48 for the second year, making the entirety of the seller contribution $18,453, or about 1.8% or 1.9% if you want to round up, concession. So about a 2-point concession. Again, coming down here, you can do the 1-0 buy down, so you can just do it for 1 year, but this obviously is a much more meaningful payment reduction. So, in your listing, you can advertise something like seller is offering below market rate financing for the first 2 years of the loan. You can advertise, something that is a lot more inviting than what the comps have. Anyway, again, my name's Terry Dyer. I work for Debbie Nelson. She owns Hanson Loans, and we just wanted to share this with you. If you have any questions about this or any other transaction or any type of loan program, give Debbie a call back at 619, the number's there on your email, 619-200-9570. And one last super important program to mention. Any loan you have, any borrower you have, up to a $3 million loan amount, 20% down, no questions asked, with the right credit score. That means we don't list the employment, we don't list the income. 20% down, up to $3 million. Okay, simple as that. The rates, they're not great. Let's face it, they're not going to be. But no questions asked, so that is what it is. All right, Gary, thanks for your time. I hope you got something out of this, and if there's anything we can do for you, again, give us a call.